Welcome to Mind Flux. Today we're unveiling a powerful new strategy that uses two technical indicators to make smarter trades. By combining indicators, we filter out noise and get clearer signals. In this video, we'll explain how this strategy works, show step-by-step examples on a TradingView chart, discuss backtesting results, and wrap up with key takeaways. Let's jump in. Trading with just one indicator can be risky. For example, a simple RSI oversold signal might catch a bottom or it might keep falling. A moving average crossover might lag and give late signals. Markets are noisy and rarely behave perfectly. That's why traders often combine indicators. For instance, pairing momentum and trend signals gives more confidence. By using two complementary indicators together, we aim to catch strong moves while reducing whipsaws. Our strategy uses Bollinger Bands and the Relative Strength Index, or RSI. Bollinger Bands plot an upper and lower price envelope based on volatility. They highlight when price is unusually high or low. RSI is a momentum oscillator that ranges from 0 to 100, showing overbought and oversold levels. In short, Bollinger tells us when price is extreme. RSI tells us if momentum supports a reversal. For example, consider these textbook rules. Buy when price falls below the lower Bollinger Band and RSI is below 30, indicating an oversold condition. Sell or take profit when price rises above the upper Bollinger Band or RSI is above 70, indicating an overbought condition. These rules combine volatility and momentum. A price dip below the lower band with a low RSI suggests a strong oversold condition. Conversely, a rally above the upper band or a high RSI suggests overbought conditions. By requiring both indicators to align, we get a clearer signal. How it works. First, we watch for price touching an outer Bollinger Band, either upper or lower. This flags a potential extreme. Next, we check RSI for confirmation. If RSI is in oversold territory and turning up, a buy is likely. If RSI is overbought and turning down, a sell is likely. This multi-indicator check helps filter out false moves. Bollinger Bands are composed of a moving average plus an upper and lower band, typically 2 standard deviations away. When price hits an outer band, it often signals high volatility and a possible reversal. In our strategy, lower band touches hint at oversold setups, and upper band touches hint at overbought setups. RSI, or Relative Strength Index, is an oscillator scaled from 0 to 100. Traditionally, RSI below 30 is oversold, and above 70 is overbought. But rather than fixed extremes, we watch RSI's trend. A rising RSI from low levels confirms bullish momentum. A falling RSI from high levels confirms bearish momentum. By combining them, a buy setup is price at lower band plus RSI turning up. A sell setup is price at upper band plus RSI turning down. Optionally, we can add a volume check for extra confidence. Step-by-step signals. First, identify a band touch. Wait for the price to reach either the lower or upper Bollinger Band on your chart. Next, check the RSI momentum. If the price hits the lower band, ensure the RSI is low and rising, for example, breaking above 30 or its recent lows. This suggests buyers are stepping in. If the price hits the upper band, ensure the RSI is high and falling, for example, dropping below 70 or its recent peaks. This suggests sellers are taking over. Then, enter the trade. When both conditions align, enter the trade in the direction indicated, such as buying at the lower band with a bullish RSI or selling at the upper band with a bearish RSI. Use a stop loss, for example, just below or above a swing high or low. For exit conditions, take profit when the opposite extreme occurs or the RSI reaches the opposite extreme, for example, selling when the price nears the middle band or the RSI hits the opposite threshold. Each step reinforces the signal. This dual check reduces noise, meaning we only act when volatility and momentum agree. It's similar in spirit to other two-indicator approaches, like going long when MACD crosses up and RSI climbs out of oversold. Here's a real example on a crypto chart. The price of APUSDT on a 15-minute chart drops sharply and touches the lower Bollinger Band, which signals an oversold move. Notice the RSI in the bottom pane is near its recent low but has begun to rise, confirming growing bullish momentum. These aligned signals, the price at the lower band and the RSI turning up, generate a buy signal. In this example, a buy marked green on the chart sees the price reverse upward. This matches our rule lower band touch plus rising RSI. As you can see, the combined signal gave a clear entry point. Here's a real example on a crypto chart. The price of APE USDT on the 15-minute chart drops sharply and touches the lower Bollinger Band, which is shaded gray. That signals an oversold move. Notice the RSI in the bottom pane is near its recent low but has begun to rise, confirming growing bullish momentum. These aligned signals, price at the lower band and RSI turning up, generate a buy signal. In this example, a buy marked green on the chart sees the price reverse upward. This matches our rule lower band touch plus rising RSI. As you can see, the combined signal gave a clear entry point. Conversely, here's a sell example. The RNDR USDT hits the upper Bollinger Band twice on the 15-minute and hourly charts, indicating an overbought situation. The RSI is high and starts falling, showing bearish momentum building. This dual signal upper band hit and RSI rolling over triggers a sell or exit signal labeled red. After this point, the price indeed pulls back. Again, both indicators align to warn us of a reversal. You can apply this in any market stocks, Forex, or crypto on TradingView or your preferred platform. The key is the logic, an extreme price level plus confirming momentum. We've tested this kind of strategy historically, and the results are educational. For instance, one backtest on Apple stock from 2010 to 2021 using RSI and Bollinger rules showed a modest 1.1% net gain after costs. That beat trading commissions but underperformed buy and hold, which made more. This tells us that while the signals can work, additional filters or stop-loss rules are crucial. In other words, no strategy is perfect. Always use risk management. Note that past performance isn't a guarantee. Every market and time frame is different. Always backtest your parameters and consider your own entry and exit tweaks. Combining indicators does improve signal quality, but keep expectations realistic. Let's recap. We introduced a simple two-indicator strategy using Bollinger Bands and RSI buy when the price touches the lower band and RSI turns up. Sell when the price hits the upper band and RSI turns down. This dual confirmation helps filter false signals and can work across assets. Key takeaway: combining indicators, volatility and momentum sharpens entries. Be safe. Always use stops, test your strategy, and never risk more than you can afford. If you found this useful, please like the video and subscribe to Mind Flux for more trading insights. Share your thoughts or questions below. We love hearing your experiences. Thanks for watching, and see you next time on Mind Flux.